Exchange-traded funds, or ETFs, represent a powerful avenue for building wealth in the stock market, and their popularity has surged since their inception in 1993. This guide aims to provide valuable insights for those entering the world of ETF investing. Packed with tips and strategies, it covers essential aspects, making it a comprehensive resource for beginners. Before we go any further into this video, welcome to Cash Money Ideas. Here, we will show you the most up-to-date making money online ideas, tips, and tricks. Please subscribe to the channel, hit the like button, and press the notification bell so that you'll be notified whenever I upload a new video. And lastly, don't forget to leave a comment below. We would love to hear your thoughts. Now let's get back to the video. What is an ETF? An ETF, or exchange-traded fund, is an investment vehicle that trades on the stock market. Unlike individual stocks, an ETF can hold multiple assets such as stocks, bonds, commodities, or a combination of these, providing diversification within a single investment. Brokerage account. Before delving into ETF investments, it's crucial to open a brokerage account. Various options like Fidelity, Vanguard, Charles Schwab, E-Trade, and M1 Finance are available. The type of account, whether standard or retirement-oriented, example, Roth IRA or 401k, depends on your specific financial goals. Choosing ETFs. Determining which ETFs to invest in can be a daunting task considering the vast array of options. With over 2,700 ETFs currently traded on the stock market, surpassing the 3,600 stocks available, the choices can become overwhelming. As an investor, the key is to streamline this extensive list and identify a few select ETFs that align with your specific investing style and overall objectives. For instance, if you are investing with a long-term retirement focus, you may seek ETFs that offer aggressive growth and possibly dividend payments. On the other hand, if you are nearing retirement, a more conservative approach with less aggressive ETFs and the inclusion of bond ETFs in your portfolio might be suitable. Clearly defining your investment goals is crucial in determining which ETFs will best suit your needs. Later on, I will provide a list of what I consider to be the top ETFs for a majority of investors, tailored to various investing goals. However, you might be wondering, how do you identify the ETFs that align with your preferences? While there are several methods, the most effective involves utilizing a powerful and free tool. Let's delve into that in a moment. ETF database. Now, let's explore how to discover the most suitable ETFs for your investment strategy. I'm about to introduce you to a powerful tool that I frequently use, the ETF database. As you can see on my screen, this website is my go-to for finding and sorting through various ETFs based on different categories, market sectors, and types. The ETF database provides an extensive array of ETF categories. You can search for ETFs by type, and by clicking here, you'll be directed to a page offering numerous options. These include searching by asset class, sector, industry, region, country, and much more. Alternatively, you can scroll down on the homepage and search for ETFs by popular content centers. For example, if you're interested in ETFs with the highest dividend payouts, a simple click on dividend will lead you to a table showcasing the top dividend-paying ETFs. Moreover, you can refine your search by sorting the table based on specific criteria. For instance, by clicking on the dividends column, you can sort the table by annual dividend yield, revealing ETFs with the highest yields. If you want to focus on the actual dividend payment, clicking on dividend will adjust the table accordingly, displaying ETFs with the highest dividend payments. Now, you might be wondering how to tailor this resource to your specific ETF investing strategy. Suppose you're in your 50s, approaching retirement, and aiming for a less aggressive investment approach. In this case, incorporating bonds into your portfolio becomes essential. By clicking on popular ETFs and selecting bonds, you'll find a list of top bond ETFs to invest in, with options like AGG and BND recognized as excellent choices. Alternatively, if you're in your 20s, 30s, or 40s and prefer a more aggressive investment portfolio, Exploring the aggressive growth ETFs category will provide a curated list of top-performing growth ETFs. This includes popular options such as Triple Qs, BUG, and IWF, known for their exceptional growth potential. The ETF database becomes invaluable when you want to invest in specific themes like blockchain, gaming, or industries like semiconductors. By clicking on the relevant categories, you can access a curated list of the best ETFs in those areas. As we progress, I'll offer a list of recommended ETFs based on various investment goals. But before we dive into that, let's continue exploring how you can leverage this resource for your personalized ETF investing strategy. ETF profiles. Once you've selected a few ETFs from etfdb.com that pique your interest, it's time to delve deeper into their profiles. Understanding the specifics of the ETFs you're considering, such as the stocks they hold, annual returns, and dividend payments, is crucial, and I'm here to guide you through it. To begin, let me demonstrate how to access an ETF profile using the example of the Vanguard ETF or VOO. Suppose you've identified an ETF you're interested in. To gather more information, head to google.com and type in the ETF name, appending ETF afterward. The ETF's profile, in this case, should appear as the first organic link on the search results page. Upon entering the ETF profile, you'll encounter various sections containing valuable information. Let's focus on the summary section, which provides a quick overview of the ETF's key attributes. For VOO, an ETF that tracks the S&P 500 index, the summary highlights that it invests in the 500 largest U.S. companies, offering exposure to the entire U.S. stock market. It also emphasizes its goal to closely track the index's return, indicating alignment with the overall U.S. stock market performance. The summary further notes that the ETF exhibits high potential for investment growth, with share values experiencing more profound fluctuations than other funds holding bonds. Additionally, it suggests that the ETF is more suitable for long-term goals where substantial growth is essential. This information, found in the summary section, provides a concise yet comprehensive understanding of the ETF's investment focus and suitability for your specific goals. Moving on, an essential metric to consider is the expense ratio, which indicates the cost of owning the ETF. This can be located on the provider's website, such as Vanguard's. For VOO, the expense ratio is 0.03, implying an annual cost of 30 cents for every $1,000 invested. Always pay attention to the expense ratio, as fees can impact your profits over time. Next, let's explore the Performance tab. For long-term investors, details like the 52-week high and low or net asset value may not be crucial. Instead, focus on the Performance section to assess how well the ETF has historically performed. In the case of VOO, examining the average returns since inception, in this instance, 16.17% annually since 2010, provides a more meaningful insight into its long-term performance. To gain insights into the ETF's composition, navigate to the market sector sections and largest holdings. Here, VOO's allocation of 30% to the information technology sector is highlighted, providing valuable information about the ETF sector diversification. Lastly, check the distribution section, which details the actual dividend payments you receive for owning shares of the ETF. If you're unfamiliar with dividends, don't worry. I'll explain more about them later in the video. By thoroughly examining these sections on an ETF profile, you can make informed decisions that align with your investment goals. Stay tuned for more insights and recommendations tailored to various investment objectives later in this video. Before we continue, I'll give you some time to subscribe to the channel and give it a big thumbs up. If you loved the video so far and found the content interesting and informative, please leave a comment below. We'd love to hear what you have to say. Now let's get back to the video. Fund overlap. To avoid fund overlap, wherein multiple ETFs share similar holdings, investors can use tools like the ETF Research Center. Fund overlap increases the risk of overexposure to specific stocks or sectors. Maintaining a diversified portfolio involves selecting ETFs with complementary holdings. Portfolio tilt. Portfolio tilt involves purposefully focusing on specific sectors. However, for most investors seeking a balanced, diversified portfolio, Minimizing overlap and maintaining a broad range of assets is crucial. Striking a balance between various sectors and asset classes helps manage risk. Portfolio correlation. Understanding portfolio correlation is essential for effective diversification. Correlation coefficients measure how different securities move relative to each other. Combining assets with low correlation, such as stocks and bonds, contributes to a well-diversified portfolio. Dividends. Now, let's delve into the realm of ETF dividends and DRIP, or Dividend Reinvestment Plan. The significance of DRIP becomes apparent shortly. Many of the ETFs you choose to invest in will likely offer some form of dividend. If you're not familiar with dividends, it's essentially when a company pays you money for holding shares of their stocks. In the case of an ETF like VTI, encompassing over 4,000 stocks, it's highly probable that some of those stocks yield dividends, and you, as an ETF investor, will receive a portion of those dividends through the ETF. Now, the crucial question arises. When you receive these dividend payments, where do they go? If you opt for inaction, these dividends automatically find their way into your brokerage account's settlement fund. This fund serves as a temporary holding space for uninvested money. However, to prevent your hard-earned money from idly resting in this account, you should consider setting up a dividend reinvestment plan, or DRIP. With a dividend reinvestment plan, the dividends you earn through your ETF are not left to languish in your settlement fund. Instead, this plan automatically reinvests the dividend amount back into purchasing additional shares of the ETF. This cyclical process of reinvesting dividends, continuously acquiring more ETF shares, and consequently earning additional dividends create a compounding effect. This compounding growth is the catalyst for the exponential expansion of your wealth over time. While I won't delve into the specific steps for setting up DRIP within your brokerage account here, a simple online research using your broker's name, followed by the acronym DRIP, should yield helpful articles guiding you through the setup process. This proactive approach ensures that your dividends are reinvested efficiently, contributing to the sustained growth of your investment portfolio. Buying your first ETF. Now that you've gained expertise in ETF investing, the next step is to understand how to acquire your first ETF. If you haven't taken this step yet, your initial task is to establish a complementary brokerage account with any of the brokers I've discussed in this video. Given the extensive nature of this video, I won't guide you through the detailed process of buying an ETF within your brokerage account step by step. However, on this channel, you'll find several dedicated videos on investing and purchasing ETFs. One of these videos specifically covers initiating a Roth IRA with a starting amount of $1,000. In that particular video, I provide a comprehensive walkthrough guiding you through the entire process from opening a brokerage account to making your initial investment of $1,000 or any other amount you intend to invest. How much money do I need? Most brokers offer fractional share investing, enabling investors to start with minimal amounts, even as low as $1. While fractional shares allow for flexibility, consistent contributions over time enhance the benefit of compound growth. Best ETFs. Identifying the best ETFs depend on individual goals. For growth, dividend income, or a combination, investors can explore ETFs like VTI, VOO, QQQ, or others tailored to their preferences. Conducting thorough research using resources like ETF databases aids in selecting the most suitable ETFs for specific objectives. If you love this Make Money Online video and found the content interesting and informative, please like and leave a comment below. We'd love to hear what you have to say. And press the notification bell so that you'll be notified whenever I upload a new video. And don't forget to subscribe to Cash Money Ideas. See you in the next video!